everyone, my name is Leah Lane and today we're going to talk about customs bond. As the country to which the world's largest quantity of goods imported, the United States places special requirements designed to ensure its economy stability and domestic security, making the import process a little bit more complex than the rest of the world. So let's just start by understanding, what is a custom bond? Almost all goods imported into the United States are charged custom duty. Even in extreme cases when the importer cannot pay, such as bankruptcy, the United States government wants to make sure that the debt and tax are paid. As a result, the government requires every importer to purchase a bond from a surety company or insurance company that is licensed by the Ministry of Finance and can assist with all documents for surety coverage. In fact, the custom bond is kind of insurance policy, so that in case the importer cannot pay the tax, the US government will collect the tax money from the surety, and then the surety or the insurance company will take legal action against the importer. There are a few situations in which you must utilize an import custom bond. It's when you import for commercial use and when you import goods that requires to meet the federal regulations. And there are two types of customs bond. There is a single bond and there is an annual bond. A single entry bond covers a single entry shipment. In case Amazon will split your shipment into several locations, you will need to get a single bond per each shipment. However, the continuous bond, also known as annual bond, covers an unlimited number of 12-month period shipments across all ports deployed across the United States. This is the ideal option for importers who are importing goods frequently and will be usually more cost-effective, starting with the importing of 3 shipments per year. Now, your next question will be, how much will this cost? That's a little tricky question. Bond does not have a fixed price, but will determine the value of the good, the type of the good, the surety company, and the handling fees. Overall, an annual bond will cost between $300 and $500. A single entry bond is calculated in multiples of $3 to $5 every $1,000 of the merchandise value, but no less than $50. So for an example, if we're going to import goods worth of $20,000, we will pay about $60 to $100 on the bond. If we import goods worth of $5,000, we will pay a minimum of $50. Now, in addition, it is very important to note that if you're going to choose to ship via ocean, you will need to attach an ISF. This document must be submitted to the US Customs Clearance up 24 hours prior to departure. In case you purchased a single entry bond, the ISF bond will cost between $50 to $70 in addition to the bond price, as opposed to the annual bond where no additional payment is required on the ISF bond. And the best way to purchase a bond, a custom bond, is basically through your freight forwarder, because this way they're going to do all the needed paperwork and they're going to handle everything under one roof. So guys, thank you for watching. Until next time.